we've got a really important topic to unpack with you today. Something that, well, many of you might be considering, or maybe you're already navigating it right now.
hmm
We're looking at the tax side of things, specifically when making that leap from employment to being your own boss here in the UK.
It's a big step for sure.
And we should mention, we're thrilled that my tax accountant, the renowned accounting firm, actually arranged this focused discussion for you all.
Yeah, it's great they're supporting this because it is a really significant shift, isn't it? Becoming self-employed and getting your head around the tax stuff early on.
Yeah,
That can really set you up for success.
definitely. Avoid those nasty surprises down the line.
Exactly. For you listening, just think, you're going from a situation where tax and national insurance are, well, largely taken care of automatically to being fully responsible for it yourself. It's a huge change.
It really is. When you're employed, PYE, that system, it does all the heavy lifting, right? For income tax,
Yeah.
national insurance.
Yeah, deduct at source.
But the moment you become self-employed, well, that flips entirely. So what we really want to kind of get to the bottom of for you today is, what are the absolute key tax aspects you need to be clued up on when you move from being employed to, running your own show in the UK?
Okay. And we'll be drawing on the official guidance from gov.uk, always the best place to start, really.
It's official course.
And we'll probably touch on some of the common themes, maybe experiences that crop up in like community forums where people share their own journeys.
Good idea. So our aim is pretty simple. Just clearly explain the essential tax differences and, crucially, your responsibilities when you become self-employed. We want you to come away feeling, well, confident, prepared, and definitely not drowning in paperwork anxiety.
Yeah, let's hope not. Okay, so where do we start? The first big one.
Yeah, let's dive straight in. That first big difference, moving away from PAYE and into self-assessment. What's the core of that change?
Well, the fundamental change is really that shift. From automatic deductions to personal responsibility, like we said, under PAYE, income tax and national insurance just come out before the money even hits your bank.
Right, you don't even see it sometimes.
Exactly. But as self-employed, you are the one who needs to figure out how much you owe, report it all to HMRC, and then, physically make those payments yourself through the self-assessment system.
Right. So you go from being sort of completely hands-off to being entirely in control, or needing to be in control of the process.
Precisely.
And there's a pretty significant shift in when these payments happen too, isn't there? That's a big one for cash flow.
Oh, absolutely. When you're employed, it's that regular monthly rhythm, isn't it?
Yeah.
Tax and NI paid every month.
Predictable.
Yeah. But with self-assessment, the usual pattern is two larger payments each year, one by the end of January and another payment on account by the end of July. And these payments cover the tax year that's already finished, which runs April 6th to April 5th. This difference in timing is really crucial to get your head around for managing your money, your cash flow.
So you need to plan ahead.
Definitely.
Yeah.
It's really wise to start thinking about setting aside funds, throughout the year, rather than facing a big lump sum, kind of unexpectedly.
Right. Okay. So income tax is still a reality, just a different process for paying it. Tell us a bit more about how income tax actually works when you're self-employed.
Yep, becoming self-employed doesn't give you a free pass on income tax, I'm afraid.
Shame.
Yeah, you absolutely still pay it. The main thing that changes is, well, how and when you declare your earnings. As we mentioned, you'll do this through your self-assessment tax return.
Okay.
And that covers all your income for the tax year, so April 6th to the following April 5th.
And what are the current income tax brackets? The ones people need to be aware of for, say, the 2024-2025 tax year. What sort of rates are we looking at?
Okay, so for this current tax year, the structure is, firstly, you've got the personal allowance. That's the first slice of your income, £12,570.
Tax-free bit.
Exactly, tax-free, 0% rate. Then you move into the basic rate band. That covers income from £12,571 right up to £50,207.
And that's taxed at.
That's taxed at 20%.
Yeah.
Above that, you hit the higher rate. So for income between £50,271 and £125,140, that's taxed at 40%.
Mm-hmm.
And then finally, for any income above £125,141, the additional rate kicks in at 45%. So yeah, it's a tiered system.
And there's that little quirk with the personal allowance for higher earners, isn't there? It starts to disappear.
Yes, that's a really important point.
Okay.
If your total income goes above 100,000 pounds, your personal allowance starts to shrink.
How does that work?
Well, for every 2 pounds you earn over that 100,000 pound threshold, your personal allowance is reduced by 1 pound.
Oh, okay.
And what's kind of interesting, or maybe painful depending on your perspective, is how quickly it vanishes. Once your income hits 125,140 pounds, you actually lose your personal allowance entirely.
Wow. Okay. So no tax-free amount at that level.
None at all. So yeah, definitely something to factor in if you think your earnings might push into that higher range.
Right. Okay. So income tax, still there, different reporting. Now, what about national insurance contributions? I know that also changes quite a bit when you become self-employed.
Absolutely. National insurance contributions, NICs, they operate differently for the self-employed compared to employees. When you were employed, you'd have paid Class 1 NICs, deducted through your salary.
Right.
As a self-employed individual, you'll typically be looking at paying Class 2 and Class 4 national insurance contributions instead.
Okay, Class 2 and Class 4. Let's break those down. For the 2024-2025 tax year, what does Class 2 involve?
Okay, Class 2. For the current tax year, it's a flat weekly rate of £3.45. Simple enough.
But only if.
But you only have to pay this if your profits for the whole tax year are above something called the small profits threshold, which is currently 6,725 lives. And this is all paid as part of your self-assessment tax return. Now, here's an interesting bit. If your profits are actually below that 6,725 threshold, you don't technically have to pay Class 2 NICs.
Right. So you save a bit there.
You do, but, and this is a key insight, I think you have the option to pay them voluntarily.
Voluntarily? Why would someone choose to pay if they don't have to? Seems counterintuitive.
It does seem odd at first glance, but it's a really smart question. Even if your profits are low, making those voluntary Class 2 contributions can be really important for protecting your national insurance record.
The record.
Yeah.
For pensions and things.
Exactly. This record is what counts towards your entitlement to certain state benefits down the road and, crucially, your state pension.
Yeah.
So paying that £3.45 a week voluntarily, even when you don't have to, is like a small investment now that could have a really significant impact on your future financial security.
I see. So if you have a few years with low profits and you don't pay voluntarily,
those years might not count towards your qualifying years for the state pension. So
Oh.
yeah, it could leave a gap.
that makes perfect sense, actually. A bit of future-proofing. Okay, so that's Class 2. What about Class 4 national insurance? How does that one work?
Right, Class 4, this one's calculated differently. It's a percentage of your taxable profits that go above a certain limit.
Okay.
For the 2024-25 tax year, you'll start paying Class 4 NICs on any profits you make above 12,570 pounds. The rate is 6% on the slice of profits between 12,570 pounds and 50,270 pounds.
And if your profits are higher than that?
If your profits go above 50,270 pounds, the rate then drops. It drops to 2% on the portion of profits that are over that higher threshold.
Okay, so 6% on the main chunk, then 2% on profits above that.
Exactly. And just like Class 2, your Class 4 NICs are also calculated and paid as part of your self-assessment tax return, usually hitting those January and July payment deadlines we mentioned earlier.
Right. So thinking about that first year, the whole rhythm of payments, when you first become self-employed, it can feel quite different to what you're used to from a monthly salary, can't it?
Oh, massively different. Yeah, your first year can definitely have a slightly unusual payment schedule. Let's maybe take a simplified example.
Yeah, please do.
Okay, imagine someone, let's call her Sarah. She leaves her employed job in, say, June 2024. And she starts her freelance business in July 2024.
Okay.
Because the tax year runs all the way through to the following April 5th, she might not actually face her first self-assessment payment deadline until January 2026.
January 2026. Wow, that's quite a lag.
It is. That payment would cover all her income and national insurance liabilities from when she started in July 2024 right up to April 2025. Now, here's where it gets really interesting, or potentially tricky.
Go on.
That's a potentially long gap between earning the money and actually paying the tax on it. While that initial delay might seem like a bit of a relief at first.
Yeah, sounds good initially.
It sounds good, but it's absolutely vital to plan for that upcoming tax bill. We see this a lot in, those community forums we mentioned. Lots of new freelancers get caught out because they haven't set aside enough money during that first period.
Yeah. So what's the advice then? Put money aside religiously.
Pretty much. A good rule of thumb, based on those experiences, might be to try and squirrel away, say, 20-30% of each invoice you send out. Just put it in a separate account, ready for when that tax bill eventually lands. preparation is key.
That's really crucial practical advice. Okay, now thinking about leaving that job, what happens if you leave employment partway through a tax year? Is there any chance you might have actually paid too much tax under the PAYE system?
Yes, there's definitely a strong possibility of that happening. Quite common, actually.
How come?
Well, if you stop being employed during a tax year, your employer will have been deducting tax based on the assumption that you'd carry on earning at that rate for the entire year.
Right, based on your annual salary projection.
Exactly. So if your total income for that tax year ends up being lower than that initial projection because you stopped working partway through, you could well have overpaid income tax through the PAYE system during the months you were employed.
Okay, can you give us a quick example just to make it crystal clear?
Sure. Let's say David was earning £45,000 a year. He left his job in August 2024, and maybe he didn't find another job or start his own business immediately for the rest of that tax year, so until April 2025.
Okay.
HMRC, via his employer's payroll, would have been taxing him from April to August as if he was going to earn the full £45,000 across the whole year.
But he didn't.
Exactly. Since his actual total income for that tax year ended up being significantly lower, he would almost certainly have overpaid tax during those months of employment.
So what does David or anyone else in that boat need to do? How do they check if they're due a refund, and how do they actually get it back?
Right, there are a couple of main ways. One is simply to get in touch with HMRC directly. They can review your tax situation for that specific year and calculate if a refund is due.
Okay, contact HMRC.
The other way, especially relevant if you are also registering as self-employed soon after, is through self-assessment. If you register for self-assessment and submit a tax return for that year, and remember, you generally need to register by October 5th of the following tax year, HMRC can often identify the overpayment during that process.
And they just sort it out then?
Yeah, they can often automatically calculate and issue the refund as part of processing your return. Either way, it's always worth looking into. Could be a nice little cash boost when you're starting out.
Definitely worth checking. Okay, so we've covered leaving PYE, getting a handle on income tax and NI for the self-employed, that first-year payment lag, potential PAYE refunds. What's the next absolutely crucial step someone needs to take when they officially become their own boss?
Right, the next non-negotiable step really is registering as self-employed with HMRC. You have to tell them.
And there's a deadline for that, isn't there?
Yes, absolutely. There's a specific deadline. You must register by October 5th in your second tax year of being self-employed.
Second tax year. Can you give an example of those dates?
Sure. So if you start your self-employed business in, say, June 2024, which falls in the 2024-25 tax year, you need to make sure you're registered with HMRC by October 5th, 2025. That's the deadline.
Okay, so not immediate, but you can't forget it.
Exactly. Don't put it off. Missing that deadline can lead to penalties, so it's really something you want to get sorted out promptly well before that date.
And what's the actual process? How do you go about registering? Is it complicated?
No, it's generally a fairly straightforward online process these days. You'll need to head over to the HMRC self-assessment registration page on the gov.uk website.
Okay, gov.uk.
Yeah. You'll be asked to provide some essential info. Your national insurance number is key, your contact details, and a brief description of what your business actually does.
Pretty standard stuff.
Yeah. Once you've submitted that, HMRC will then send you your unique taxpayer reference, or UTR. Usually comes in the post.
Ah, the UTR number. You hear about that a lot.
You do. You'll need that UTR to then set up your government gateway account online. Think of the government gateway as your secure online portal for all your tax stuff with HMRC.
Right.
It's where you'll submit your self-assessment returns, check your liabilities, make payments, that kind of thing.
Okay, so registration. Absolutely key. Specific time frame. Got it. Once you are registered and you start earning money, you'll have income coming in, but you'll also almost certainly have business-related expenses. How do those factor into your tax calculation as a self-employed person?
Ah, yes, expenses. This is where things can become, well, quite beneficial in terms of reducing your final tax bill.
Music to people's ears.
Yeah. As a self-employed individual, you can deduct certain allowable business expenses from your total income, your turnover. You then only pay tax on the resulting profit.
Okay, profit, not turnover. That's important.
Very important distinction. And the key rule for these expenses is that they must be incurred wholly and exclusively for the purposes of your trade or business.
Wholly and exclusively. That sounds quite strict.
It is the official test, yeah. It means the cost was only for your business, not for any personal reason.
Okay. Can you give us some clear examples of what HMRC typically classes as allowable business expenses? What sort of things are we talking about?
Sure, there's quite a range. Common examples include your office costs, things like stationery, printer ink, maybe software subscriptions, postage, business phone bills.
Right, the
Yeah.
basics.
Then there's travel costs, but only if they're directly for business purposes. So fuel for business trips, parking fees, train or bus fares to meet clients, that kind of thing. Not your regular commute, if you
Wow.
had one.
Makes sense. What else?
If your business requires you to wear a specific uniform, maybe protective clothing, the cost of buying and cleaning those can often be claimed.
Okay.
If you employ staff, or perhaps use subcontractors, their salaries or the fees you pay them are allowable. The cost of any goods you buy specifically to resell your stock, basically.
Yep.
Financial costs directly related to the business, like specific business insurance premiums or bank charges on a business account. Costs related to your business premises, if you have separate ones, heating, lighting, business rates.
Okay.
Advertising and marketing costs are usually allowable too, paying for a website, online ads, flyers, etc.
Yeah.
And any training courses you take, as long as they are directly relevant to improving skills for your existing business activities.
That's quite a comprehensive list. Are there any common pitfalls or things people think they can claim but actually can't?
Yeah, there are a few important things to be aware of. Firstly, if you decide to use the £1,000 tax-free trading allowance, which is a simplified option, mainly for people with very small amounts of self-employed income, you cannot also claim specific business expenses. It's one or the other.
Okay. Allowance or detailed expenses.
Exactly. Also, when you buy bigger things like significant assets, maybe a computer, machinery for your trade, or business vehicles, these aren't typically claimed as a standard expense in the same way if you use traditional accounting. They're usually claimed through something called capital allowances.
Capital allowances. Sounds a bit more complex.
It can be, although if you're using the simpler cash basis accounting method, which many small businesses do, you can often claim the cost of equipment and machinery, though not usually cars, as a regular allowable expense in the year you buy them. So the accounting method matters there.
Right. And what about things you use for both business and personal life, like your mobile phone contract, maybe home internet? It's so common these days.
Yeah, very common. In those cases, the wholly and exclusively rule gets adapted slightly. You can only claim the proportion of the expense that is genuinely for business use.
Okay, so you have to split the cost.
You do. For example, if you reckon, say, 60% of your mobile phone usage is business calls and data, you can claim 60% of your total mobile phone bill as an allowable expense.
And you need to justify that 60%.
You need to have a reasonable method for working out that business proportion. Yes.
Sure.
And it's always a good idea to keep some kind of record or note of how you arrived at that split, just in case HMRC ever asks.
Right. Makes sense. Only claim the business bit. What if you work primarily from home? Can you claim for things like a portion of your electricity bill or even rent or mortgage interest?
Yes, absolutely. If you regularly work from home, you may well be able to claim a proportion of your household running costs. That could include things like heating, electricity, council tax, maybe a portion of your mortgage interest or rent, and certainly your internet and phone line costs.
Again, based on proportion.
Again, based on proportion. You'll need to use a fair and reasonable method to divide those costs between your business use and your personal domestic use.
How do you do that fairly?
Common methods might be based on the number of rooms in your house and which ones you use for business, or maybe the amount of time you actually spend working from home compared to the total time the house is occupied. It's worth noting, too, HMRC also offers something called simplified expenses for working from home and also for business vehicles, and if you happen to live on your business premises, like in a pub.
Simplified expenses.
Yeah, it's basically a flat rate allowance you can claim instead of calculating the exact proportions of your actual costs. It can be much easier for some people, especially if the amounts are relatively small. You just need to check the current rates and rules on gov.uk.
Okay, so simplified expenses might be an easier route for some. It sounds like really understanding what you can and can't claim as an allowable business expense is absolutely crucial then. It directly impacts how much profit you pay tax on.
Precisely. It's one of the main ways self-employed people can legitimately reduce their tax liability. And linked to that, keeping thorough, accurate, and organized records of all your income and all your expenses is absolutely essential.
Good record keeping underpins everything.
It really does. It makes sure you can correctly complete your self-assessment tax return and, just as importantly, claim all the deductions and allowances that you're genuinely entitled to. Don't pay more tax than you need to.
Okay, wow. We have covered so much ground today. That big switch from PAYE to self-assessment,
Yep, the responsibility shift.
how income tax and national insurance work differently when you're self-employed, those Class 2 and Class 4 NICs,
And the voluntary option for Class 2.
navigating that potentially weird payment schedule in the first year,
Planning for that January payment.
the possibility of getting a payee refund from your old job,
Always worth checking.
the really important step of registering as self-employed with HMRC and that crucial deadline.
October 5th of the second tax year.
And finally, digging into the details of allowable business expenses and record keeping. Phew.
Yeah, it's a lot to take in. But all of these elements are really fundamental, aren't they? To making a successful and hopefully financially smooth transition from being employed to running your own business, at least from a tax perspective.
Absolutely. So for you, the listener, if you are thinking about making this move to self-employment, or perhaps you've already taken the leap and you'd like some personalized expert advice that's really tailored to your specific tax situation.
Which can vary a lot from person to person.
Exactly. My tax accountant, who, as we mentioned, kindly arranged this discussion for you, they really are a fantastic resource. They can provide that expert guidance you might need to ensure a smooth and, importantly, a tax-efficient transition to being your own boss.
Yeah, getting professional advice, especially at the start, can save a lot of headaches later on. Understanding these tax considerations we've talked about today is just such a vital step towards building a thriving self-employed career.
Well said. Taking the time to get it right from the outset will really equip you well for the journey ahead, won't it?
Definitely. It sets a good foundation.